Good morning, everyone. This is Financial Literacy 101. And today, we're going to be talking about a stock that has blown up. I believe on last Friday, it blew up around 1,000%. And I think it's important that we understand that this stock could be very, very dangerous if you invest inside this stock. So we're going to get into this review of this stock, but I want you to be very, very cautious and aware of you going all in on this stock or investing a large sum of money. So already we need to look at this stock in its totality. Now, as you see, for a very long time, this stock has been moving sideways, right? From its inception going back to 2016, we're looking at around $9, as it's ticking here sideways. The stock is moving sideways. It's having not really any significance, right? We go from 980 all the way up to around 60 here, and it's not even raising a dollar. And all of a sudden, back in 2019, February 1st, this stock goes up 3,000% to $308. And we're gonna look at some timelines here. We're gonna look at how this stock has been played with, and I think that you be very, very cautious. But there is some room for you to make some money here. Okay, now on March 2019, we're looking at $53 per share. And now back down, even got down under $1. And now this stock is up. For the weekend, it was up around $11. Okay, here it is right here, $11.82. Now, let me show you in the past week. This is how this stock has been looking in the past week. It has risen over 1,000%. So this reminds me of one of those stocks that Wall Street bets groups kind of get involved and they control the stock. And you should be very cautious and aware of certain stocks like this, because what happens is people are watching like Fox Business, CNN Business, MSNBC stocks, and we're watching all of these people give you these analysis and predictions of stocks. Well, the problem with that is that they're not really digging deep inside the stock to really let you know if this stock has been toyed with and been played with. Because what I'm looking at here is another classic case of pump and dump. Can I show you that? Let me show you what I mean by pump and dump. Now, let's go to the 5 years. Now, I don't have to even teach you or display and do an overview of how this stock has been at this point right here, has been pumped at $308 per share and then dumped. And now this stock is under $100. This stock is under $20. So you should be very, very cautious. If you guys looked at Phunware last week and you invested or you thought about investing, but now, this is not all dire. This is not all negative news. There is still be money to be made with this stock, but it's going to require you to hold this stock for a very, very, very long time. It is, because you have to wait again until this stock is what? Pumped again. And when it's being pumped, you can get in, you can stay out, or you can cash in and actually make some real cash. All right, let me move on here. Now, I'm going to give you some analysis here from Stock Market, from the Market Watch group here. As we see here over the course, year to date, this stock has been up 593%, but did not let you fool you. A lot of people lost a lot of money when they invested short term and not long term in this stock. The analyst rating here on Market Watch says buy with a negative EPS of 62, which is not that bad, okay? Which is not that bad. But again, I have to point to the analytics. The 2-eye research is a killer. When you look at something and it doesn't look right, guess what, ladies and gentlemen? It is not right, okay? Moving right along, Yahoo Finance. Now, we already seen how this looks, but what Yahoo Finance is stating, performance outlook, as you can see right here in the middle of your screen, that short-term, mid-term, and long-term looking to be increased, looking to be up, meaning that there's a possibility that you're making some profit. Now, when I come down to their prediction as far as strong buy, hold, underperform, and sell, I'm getting a buy rating at 4. That's a buy rating, and 5 is a strong buy. Moving along. Because now I really want you guys to dig deep inside this stock, right? Like the way I have. Now, I'm going to go through forecasts. We're going to look at what the stockinvest.us states on forecast. It's stating here that The Roth Capital Group gave this stock a $1.75 rating for fun. And right now the stock is at $11.85. We're talking about a group. StockInvest.us gave this $1.75 and currently is at $11. What could possibly happen to the stock? Now, as I'm looking at the stock in the pre-market, it's still ticking up. All right, from $8, it went up to $13 and it dropped down to over $10, and now it's up to $12 again. Something is going on with this stock. Let me show you something else that I find very interesting here, and maybe you will find the same thing. Now, I went to the insider trading tab here, right? And look at this. From August all the way until September 15th, so damn near a month, all of these people have been selling their stocks, right? They've been selling their stocks. And then I want you to look at the amount of stocks they've been selling, okay? The amount of stocks. We're looking at 8,000 shares, 9,000 shares, a total sell-off at 37,000 shares, 14,000 shares, 20,000 shares, 20,000 shares. And then this person, these two people buy the exact same amount of shares at 152,000 shares. I just want you guys to look at this very quickly, and then all of a sudden the stock ticks up. Right? So what am I telling you here, family? What I'm telling you here is that if you're going to invest inside this stock, I want you to be very, very careful, and you have to think long term. Me personally, I thought about buying an option and then exercising that option to buy 100 of those shares and just hold on to them, because what it looks like, maybe in the next year, this stock has a propensity, it has the room to actually go up to around 200 to 300 again. But again, we're just betting at this point. This is simply gambling at this point. There's no rhyme or reason why this stock has risen and fallen in a very short time frame that it has, where everybody else is saying, hey, this may not be a good stock. I went over to Zacks, and I just wanted to see what Zacks said here. And at $8.74, Zacks ranks it sell. Not a strong sell, but sell. But look at the style scores. We're looking at F for value, F for growth, F for momentum, with a total VGM score of FFF. Now, you know, some of you guys got Fs in school, and Fs were never good. But again, I do implore you that it's a possibility if you buy shares of this stock and you hold on. But at $11.69, as this stock is still ticking somewhat, I don't think that this is a good buy at this particular price point, unless you buy an option, and it's a very, very long-term option. So I'm going to just look, and right now, guess what? They said because of the volatility, they're not even offering options. So there's no even room for options. So there you have it, ladies and gentlemen. Unless you're going to go in and buy it at the current stock price, which I forbid you not to. I forbid you not to go and buy Phunware, because the stock market blew up on Friday and they said Phunware was up over 1,000%. In my personal opinion, do not buy this stock at the current stock price. You want to wait till the stock gets under around $5, because as we're looking at this stock, if you guys are not familiar with this stock, let's be more familiar with the stock. So Phunware engages in the development of a multi-screen as a service platform and enterprise cloud platform for mobile. It provides companies the production solutions, data, and services necessary to engage, manage, and monetize mobile application portfolios and audiences at scale. Its platform also allows for the licensing and creation of a category-defining mobile experiences for brands and their application users worldwide. The company was founded by Alan S. Konoski and Lang Dang in February 2009. It's headquartered in Austin, Texas. So basically, ladies and gentlemen, I'm going to be real to you. If you're looking for a stock that's under $15, looking for a stock under $10, in my personal opinion, don't invest in Phunware. You probably be losing out. Now, if Phunware blows up, I'm going to be kicking myself in the teeth. But because of the volatility of it, it's simply not sustainable, in my opinion. And if you were to go in and buy the stock, look to hold it for a very long time. Some of you say, well, I have $100 I want to invest in. Go ahead and buy 9 to 10 shares of the stock. But believe me, this is a stock that you want to hold on for a very, very long time, until at least it blows up again, if that even occurs. You guys have a great and wonderful day. Good morning, Prime X, as well as Jermaine Anderson. This is Financial Literacy 101. Learn money and be inspired. You guys have a great, wonderful Monday. I'll see you guys on the next one. I'm out.